Hey everyone, hopefully all of you doing well. Welcome to the weekly market review where I'll be delving into the opportunities for the week ahead. Uh, there was a lot of momentum in the previous week, especially with the JPY pairs, and I'll be delving into that midway through the webinar itself. So please take a look at that particular pair, especially AUDJPY. Interesting development with that, which I'm extremely excited about, particularly for this week. But before that, let's start things off with euro dollar. And with euro dollar itself, initially we were looking at an inverse head and shoulders formation, especially on the 4-hour chart. So we're looking at this particular formation over here. We can see the left shoulder and the right shoulder to then go to the upside. We did have a move to the upside, a fairly dynamic move as well, but we reached the first inflection point, which was the highs. And from there, we did get a setup to take it to the downside. So whenever we have these sort of biases and positions, understand that there's a probability as a result. So initially, I think we were looking at this inverse head and shoulders here, then we're looking at another inverse head and shoulders here, and that was at that particular time, that's the best market information. So I think we were over here at the time. So at this particular point, when I did the webinar, we did get a move to the upside, then we got a continuation pattern and we did move further higher. But then we always need to be on our management game in terms of understanding what the market's going to do next. And it's not, we have certain levels in place or inflection points, I like to call them. So the first one would be these highs, the next one would be these highs. Overall, looking at the particular structure on the higher time frame, if I were to go to the daily, we haven't quite reached the third touch, but we could consider it as a third touch in terms of this ascending. So it can be seen that we had another ascending channel over here, dynamic moves to the downside. Is this a continuation pattern so they get lower? And then we could see more of this sort of head and shoulders formation over here. That is a possibility. However, we also have to look at both sides. So that's one possibility. The other one is we come back higher, complete this M-style double top formation to then drop from this particular inflection point. There is also the possibility we could be reaching the most recent or the highs which are printed back in 2018. So these are the different high probability setups for euro dollar itself. What I'll be looking for is we've had a fairly dynamic move to the downside. Now the question is, what happens next? Are we going to get a continuation pattern? If so, we could be dropping earlier, or is this going to be a reversal? It's a very simple question, and we're quite close to the double bottom at this particular point. So I'll be looking at that to see how price reacts, to see what we get. Now, if we were going to go to the upside, my targets would be as marked in this particular point, then the next one would be the previous highs. Now, if we were to go to the downside, similar thing, you mark in the lows systematically, and these are the different target areas. So we have one at 1.16 and one at 1.07. So we'll see what happens with regards to the formation, whether we do get that continuation or not. Moving swiftly on to GBPJPY. Now, with regards to GBPJPY, we had just broken this particular channel, and what was mentioned was this was forming an ascending channel over there. And I'm just going to zoom into this so we can see this a bit more clearly. So we could see this ascending channel over here, then we broke to the upside, and from here a lot of people will be thinking the trade is over, it's gone. But again, we always ask ourselves the question, what happens next? And with regards to this particular pair, we did get a trade to the downside, and we appear to be creating a continuation from this. This is actually a high probability trade if this was to play out. The reason why is because we've clearly broken the highs. People will be seeing this as a broken resistance turned into support for a trade to the upside, which is a possibility, but through experience and through backtesting, what's more likely to happen is we then get a trade to the downside, catching people on the wrong side of the market. If we were to get a trade to the downside, then I'll be looking at this particular head and shoulders formation. So let's just have a quick peek on the 1-hour chart. I wouldn't be taking actually this from here. I'd like to see a further development, maybe on this third touch over here, then take it to the downside, because this does have a slight element of an inverse head and shoulders to maybe come back up towards the double top, maybe slightly higher before the drop. So let's keep a close eye on this, but I am favoring longer term the trade to the downside. I'm not too interested in the trade higher. GBPUSD, This is another really good trade which we were looking at. So if we were to zoom out, and if you check out last week's analysis as well, we were looking at this third touch over here of this ascending, and we also marked in the highs as an inflection point. We're looking for a trade to the downside, which we did get in the last couple of days on Thursday and Friday. So we could see let's just zoom in slightly. We end up getting this sort of double top over here. You can see the ascending channel, the nature of the market, and even throughout this whole move over here, that's corrective. So price doesn't sustain like that. A dynamic move is about to happen, and we could see this is a fairly dynamic move. Now, what I'm looking for, continuation. I'm looking for a trade to the downside, and I'm actually in a trade to the downside already from up top. So I'm looking to maybe scale in or adjust my stop loss so then I can take as much profit as possible. For the moment, my stop loss is at this point over here, just above the highs. And as a minimum, I do see the price reaching down here at 1.37. It could break below potentially, but let's keep on the management. I'm not too interested in the buy at this moment in time. I'm mainly looking for sells. EURGBP, so with regards to EURGBP, see we clearly broke the lows itself, and from there we then had a dynamic move higher. Now I'm just looking for a continuation pattern to confirm the move to then take it back to these highs. Not too interested in the sell itself. Is it possible? Yes, if we do create more of this continuation like so, that is possible. But for this moment in time, still looking for a trade to the upside. Moving on to the JPY pairs, and with regards to AUDJPY, on the higher time frame, what we looked at last week was we saw this larger descending channel. And there was the possibility that if we were to create a continuation, we can go all the way back to these highs up here. But what also I was saying was, because of how the market has been, especially at this point, it's been very corrective. We can see this sort of ascending channel. We've broken higher, but at the same time, I think it was at this particular point, I said that we could be creating a head and shoulders formation to then come to the downside. That's exactly what seems to be forming. So we have a dynamic move and an aggressive move to the upside, then an aggressive move to the downside. Now we're looking for that continuation to then confirm the move and give us that nice head and shoulders formation to then take that to the downside. And if that is the case, there's a huge trade on the cards, even to these lows just down here. So we'll keep a close eye to see what happens with regards to this one. And it's similar with all the pairs in terms of the JPY pairs. We had a push to the upside. Now we're just looking for, and then a push to the downside. Now we're looking for a continuation to then take it lower. CADJPY is not, this actually should be in the watch list. So I'm just going to place it there. I prefer AUDJPY and NZDJPY further, especially NZDJPY. So if you have a look, we can see this would turn into a beautiful head and shoulders formation to then drop to the downside. I'll most likely take it on the 4 hour, but I'll be using a 1 hour maybe for a more precise entry. So you can see over here, if I go to the line chart, you can see the tops quite clearly. We can see the bottoms. This one still potentially could go slightly lower before actually going higher. And on the third touch up here, that's where I'd like to take it to the downside. Moving on to USDCAD. So with regards to USDCAD, what I was mentioning was if we were to zoom out, let's go back to the 4 hour chart. We had this 3-touch descending channel, and we were looking for the next touch itself. So we hit that point to a T, and then we have now reversed back to the upside. And from here, we need a continuation to then confirm it to go even higher. If we don't get that, then we're likely just to stall and create some form of deep pattern that is not yet apparent. That will reveal itself in the coming days and weeks. But for the moment, I'm still favoring a trade to the upside, but we do need a continuation pattern to then confirm that. I wouldn't just take the trade from this particular point. It needs more information. What I like about this trade so much is that we broke the lows very clearly. So if I were just to replay this, people would be selling at this particular point because they see the lows broken so clearly. But this is why I trade patterns. This is why patterns, they are more reliable than most other things that I've used. So we'll get to the third touch, and then we start to reverse from there. and we actually create sort of an inverse and shoulders formation, slightly messier, just crept our way to the upside itself. So yeah, just mainly looking for an upward move on USD CAD. With regards to gold, so gold, we broke the double bottom itself. I was initially at this point looking for a short-term move to the upside, which we got. I was actually looking for a further move higher. We didn't get the continuation we were looking for at that particular point. So what we got now is we aggressively move to the downside. Let's see if this turns into continuation. If it does, we have the scope to go to the downside, potentially to 1650-ish. And from there, we can then see that trade to the upside. Larger picture, we have a 3-touch pattern. But it doesn't need to go all the way to the downside because we have broken the lows quite significantly. If we do, say, create a double bottom and then go to the upside, we could then create this sort of inverse head and shoulders from here. And from there, we could then see that move to the upside, which I've been anticipating. Moving on to the next, to the watch list itself. So EURNZD is very interesting. And what we were looking at last week was this 3-touch descending channel. And from there, trade to the upside. Why I like this so much is because we broke these lows, catching people on the wrong side of the market. So this is, again, so people would see this break of the support, turn into resistance, trade to the downside, come back up. They expect this to be a resistance for a trade to the downside, but they don't get that, and it ends up going higher. But why I don't trade in levels is because that it kind of distracts you from the pattern that's actually happening. And in this case, it's an inverse shoulders formation. So looking for a continuation. And then from there, if we do get a break of this particular channel, what I'll be looking for is the highs longer term. And that's all the way up here. So there's a huge amount of potential. So from this current moment all the way to there, there's around just under 1500 pips. Depending how tight we get in, depends how much percentage we could take. That's a huge trade on the cards. Moving on to EURGBP. So with regards to EURGBP, broke up ever so slightly, and then trade to the downside. Similar story with most JPY pairs, looking for that sort of inverse head and shoulders formation. Sorry, head and shoulders formation to then take it to the downside. This one is on the watch list because I think that GBPJPY, AUDJPY, and NZDJPY are cleaner. This one is not as clean. So, say for example, this particular JPY pair plays out, but this one doesn't. That doesn't mean. Remember, there's two pairs. There's the AUDJPY, sorry, Aussie dollar, and there's Japanese yen. With this particular one, there's a euro against the Japanese yen. So, for example, if one goes and the other goes, it's dependent on the other currency itself. So, in this case, it'd be to do with the euro. So, we just need to keep an eye on that itself. But overall, pattern-wise, I do think AUD and NZD are cleaner. With regards to AUDUSD, we did get a trade to the downside, which we were anticipating, and quite an aggressive move. One actually, this did escape me, and it's a trade which I would have taken 9 times out of 10. Beautiful retrace candle, not quite engulfing at the top. High momentum candles to follow. We could have used the 4-hour technique, and what the 4-hour technique is, if you were to enter, so let me just show you if you haven't seen this, because I think I did it a while ago. Say, for example, you were to enter from this particular point and you were to manage it according to the 4-hour candle closes. So when this 4-hour candle closes, I'm going to use this ray line as my stop loss. I'd put my stop loss at this particular point. I let it go for another 4 hours, and then I move my stop loss to the next point, which is over here. Then the next 4 hours, I move it to this particular point, and I keep on repeating the process over and over again. And what you see is at this particular point is where you would actually get stopped out over here. So you get stopped out at this particular point, and how much percentage you would have taken was about 6.5% if you were to take this particular setup. So all you do is you wait for the 4-hour candle to close up here, and then you put your stop loss above. And from there, this is where you use this 4-hour technique. It only works in the dynamic stage or dynamic nature of price itself. a very key lesson. Said it several times, but I know a lot of people have been jumping on more recently, so I thought it's a good idea to repeat it. Now, moving on to GBPAUD. This particular one I'm actually not interested in as of yet. EURCAD, similar to last week. So just check out last week's analysis. Nothing much has changed. NZDUSD, so not too interested as well. USDCHF. So if you go back a few weeks, we're looking at this inverse head and shoulders formation, and that's exactly what we got. So you can see, although CHF pairs are slightly messier and they're not as clean, we can still see overall we have got that move to the upside, which we were looking for. And that summarizes the currency pairs which I'm looking for the week. Just a quick note on cryptos. So with regards to Bitcoin itself, I think it was the previous week which we did hit the all-time high of 58 to 59,000. Since then, we've actually had a mini sort of crash. So price is now trading at 48,000, went all the way down to 43,000. And what I'm anticipating for this particular, I was looking for a crash for a while. So I don't know whether this is going to be a trade that's going to go back higher or whether the crash is going to continue. For at this moment in time, I'm fairly neutral on it. I can't predict, but if there was something from the technical point of view which would give me an indication, I'd see this as a potential inverse head and shoulders to maybe come slightly further to the downside. How far down, we don't know. But what I'd do is I'd put different levels in as inflection points. So I'd put this one in and then I'd put this one in. And people might be thinking, isn't this too low? Does Bitcoin have to go this low? And it has done in the past. So as a result, you cannot rule out any particular level itself. Overall, I am fairly neutral on it. One other note was there was a flash crash last week on majority of the cryptos, especially on the Kraken. So if you look, I just pulled up Kraken for Polkadot, and Polkadot it went all the way down to $12. And if I'll show you Cardano as well. So if I go to Cardano on Kraken, you could see it went all the way down to 15 cent. This wiped out all margin traders, and it was specific to the Kraken network itself. So it didn't happen on any other exchange. There was a crash that did occur at the same time, but it wasn't nearly as low. So for example, if we were to compare Ethereum, you can see Ethereum on Coinbase, it went to, at that particular time, 1500. But then if you were to go to Ethereum on Kraken, it went all the way down to $700. So it's always, you should always be careful when margin trading. I don't particularly encourage it. I always say just buy the coin itself. There's enough volatility. If you look at even just today, the markets are up. Like IOTA is up 8%, Bitcoin is up 6%. That's just insane. If you compare it to the currency markets, you can see that it's rarely a currency moves more than 1%, maybe more than 2% in a day. So there's enough volatility if you were just to do a one-to-one trade on crypto itself. So there's no need to be greedy with regards to margin trading, because a lot of people would have got burned. I think I remember seeing a New York hedge fund. They got wiped out because they were trading on Kraken, and they were margin trading. So you should always be careful. I think they lost 400 million. With regards to the next pair, which I'm looking at, is Ethereum. And with this particular crash, I mentioned it last week, I see it as a sale. It's nothing more than that. So I'll have these levels as inflection points, and at each level, I'll be assessing whether I'll be buying or selling. With Ethereum, I do think that this might be turning into inverse head and shoulders formation, like so, to then go higher. And I'll be targeting these highs up here, might accumulate some. Longer term, I do think that all of these, or majority of these bigger cryptos will recover, like Bitcoin, Ethereum, Polkadot, IOTA, Litecoin. But we don't know how far down it can go. So the best way to invest is through a technique called dollar cost averaging. And now what that is where you invest a systematic amount either based upon price or based upon time. So either you buy, let's say you have $2,000 to invest. You invest $100 per every 3 days till the full amount is done. And what you get the average of the move. Because say, for example, it goes down today, but then up tomorrow, and you start to get to the average itself of the move. You do make less, but then the losses are less as well. Because what you don't want happening is for you to invest at this particular point, then for it to crash all the way down here. And then at this particular point, you thought to yourself, imagine if I had that $2,000, imagine I invested it from here. And this is where the what ifs come in. So it's a very dangerous road to go down. What I'd recommend is just investing in systematic based on either time, or let's say you invest $500 at this particular point, and then when it gets to $1,400, you invest another $500. When it gets to $1,200, you invest another $500. When it gets to $1,000, you invest another $500. And even if it doesn't reach this particular point, so say for example, it comes all the way down here, but then it starts to recover, you then have made more money overall if this bull run was to occur. So that's how I'd be investing pretty much in all the cryptos. I'm not going to go through any more, but these are predominantly the ones which I'm holding at this moment in time. Apart from that, hopefully you did enjoy this weekly outlook. Please make sure you like, comment, and subscribe. And if there's any particular pairs, put it in the comment section down below. Apart from that, I'll catch you next week in the next weekly update.